So there's been this discussion in the investment community about whether or not tariffs are boosting earnings in the short term. Dan Niles, CEO of Niles Investment Management, went on CNBC and explained one side of this argument.
You had US GDP in Q1 come in, and the part that I don't think people paid enough attention to is US GDP is 25% of global GDP. You had imports up 41% in Q1. Now, if that's not pulled forward in demand, I don't know what is. And that's the reason why Q1 results for all of these companies came in well. Because don't forget, in the fourth quarter, when they reported Q4, 6 of the 7 Magnificent 7 companies had revenue estimates get cut for March. There's a reason things sounded so good when they then reported the March quarter. So you're going to get payback in the Thanksgiving through Christmas time period when people are expecting, big sales of smartphones or PCs or cars, things that people bought in advance, because consumers aren't stupid. They go, well, gee, if I've got tariffs coming, maybe I should buy a few of these things I was thinking about that are high-priced goods in advance. And so that's why you're seeing companies like Apple doing well. In terms of the results they're reporting, I think they're going to have another good quarter. But when you are expecting 30 to 35% of your revenues in just the month of November and December for most, consumer electronics companies, et cetera, I think you're going to see a big disappointment because the numbers haven't been moved down because they came in good for March.
So Dan Niles is one of many investors who believe that consumers are going out there to buy electronics like iPhones and other goods ahead of the tariff price increases. And that's why we're seeing better than expected earnings in the last quarter. I can agree that there are probably some people out there who are doing that, but I personally don't know one person who has thought of this. And I asked them if they knew anyone who has thought about this, and they said no. The point is, I doubt it's happening to an extent that's shifting company earnings in any major way. Not to mention, a lot of people are struggling with money right now. Ramsey Solutions shared this research on May 1st, 2025, stating that 1/3 of Americans, or around 33%, report that they're struggling or in crisis with their money. 53% of Americans say they are living paycheck to paycheck. Almost half of Americans, or 46%, report some difficulty paying bills, and about 1/3, or 32%, have paid a bill late in the last 3 months. And 52% of renters report some difficulty paying rent in the last 3 months. The point is, with how the US economy has developed over the last few years, I don't think people even have the money to go out and buy these things ahead of time. But I'd love to hear what you think about this in the comments below. And remember, I'm not going to make investment decisions based on macro uncertainty like this. If you're a long-term investor, something like this should probably just be swept under the rug. It'll be forgotten tomorrow.